Due to the stock market crash, now is a better time than ever to invest and do dollar cost averaging on stocks. So what is dollar cost averaging and why is it one of the best strategies out there for investors? Dollar cost averaging is the investment strategy in which an investor divides the total amount to be invested across periodic purchases of a specific asset in an effort to reduce the impact of volatility on overall purchases. Now that we know what is dollar cost averaging, why is dollar cost averaging one of the best strategies out there for investors, especially during a stock market crash and a bear market? We need to realize the fact that as humans in the stock market, we all have the tendency to want to see the prices of our stocks rise up immediately after we have purchased the stock. So it scares a lot of investors away when it comes to doing dollar cost averaging as the stock prices continue to fall. But it's really all about perspective. Think about it. If you saw a brand new iPhone 11 going for $200, chances are you would bought it without thinking twice. And let's say after you bought the phone, you saw another shop selling the same exact brand new iPhone 11 now selling at $100 instead of $200. Will you still buy another phone? You probably would, right? Even though you had just bought one at $200. Why is this so? It really comes down to this one thing. That is, you know the real value of a brand new iPhone 11. You might not know the exact price of a brand new iPhone 11, but you know enough that if you resell it, you can fetch it at least 3 times the price that you originally paid for. So you know regardless whether you paid $100 or $200, you know that if you resell either one of those phones, you will definitely still make a profit reselling it. And this is kind of similar to dollar cost averaging. If you know the real or intrinsic value of a company, not necessarily the exact value of the company, but a rough estimate, and if this company is selling at a discount way below its real and intrinsic value, will you buy the company? You will, right? Because you know that over time, the stock price of the company will rise higher than what you are currently paying it for. The reason many investors are afraid of doing dollar cost averaging during a stock market crash and a bear market is because they do not know the intrinsic value of a company and the financial strength of that company. And because they do not know the intrinsic value of a company, they do not know whether at the current price, are they getting a discount on that company. And because they also do not know the financial strength of a company, they do not know whether the company is likely to rise in price over time. And that is why some investors out there are afraid to invest and do dollar cost averaging during a stock market crash and a bear market. But for those of us who have done our homework, we are excited for the stock market crash while others are fearful. Because we know that a stock market crash is like a Black Friday sale in the stock market. And this Black Friday sale, unlike the one that other people are familiar with, which happens every year, the stock market Black Friday sale happens on average only once every 4 years. You heard that right, once every 4 years. So when it finally arrives, do you understand why some investors are literally shaking with excitement? It's because we have done our homework and we understand that a stock market crash presents a rare opportunity to get our favorite stocks on discount. So let's go out and invest and do dollar cost averaging on stocks. Wait, hold up there. Before we start blindly and randomly doing dollar cost averaging, there are 2 important things to take note. The first is we should only do dollar cost averaging on fundamentally strong companies. It might sound really simple, but it's shocking that there are so many people out there who are still doing dollar cost averaging on fundamentally weak companies. If we invest and do dollar cost averaging on fundamentally strong companies, these companies are more likely to rise in price over time. And when prices of these companies rise over time, we as investors and stockholders will benefit from the capital gains. On the other hand, if we invest in crappy companies, these companies may go under during this stock market crash and we can lose our money. Therefore, we only want to do dollar cost averaging on fundamentally good companies. So that's the first thing. The second is doing dollar cost averaging strategically so that the prices that we invest in stocks on average are lower than the prices that we pay if we just do dollar cost averaging haphazardly. Let's jump on my computer and show you graphically what this means. Alright, so we're on my screen right now. The first thing that we need to take note as investors in the stock market is that a stock market does not fall in a straight line. So what do I mean by that? Let me give you a graphical illustration of this, right? So the stock market, when it's falling, it usually falls in this direction. So it goes down, and then it goes up, it goes down, goes up, goes down, and so on and so forth, right? So the stock market does not fall in a straight line. It usually follows this pattern. So it goes down, goes up, goes down, goes up, goes down, goes up, and so on and so forth, right? So as investors in the stock market, where do we want to do our dollar cost averaging in a bear market? So we want to do our dollar cost averaging at these points here, right? So we want to do it here, do it at this point. We want to do it at this point, and we want to do it at this point, right? So we want to dollar cost average into all these different blue points, right? Compared to if we dollar cost averaging at this point instead. Let me put it in red. Right? So in a bear market, we as investors in the stock market want to do our dollar cost averaging at these blue points instead of the red point. Because if we do it at the blue points, can you see that on average, the prices that we buy and do our dollar cost averaging into are lower than the prices that compared to if we do it at the red points, right? So that is in a bear market and when prices are falling. So on the other hand, how do we do dollar cost averaging when prices are rising, right? So let me show you. So similar, when the market rise, it doesn't go up in a straight line. It tends to follow this direction, right? So it tends to go up, goes down, goes up, goes down, goes up, goes down, and so on and so forth, right? So that is when the market is going up. So when the market is going up, we as investors want to do our dollar cost averaging at this point here, this point, and this point, right? In contrast to this point here, this point here, and this point here. So again, we want to dollar cost average in at the blue points rather than the red points, because if we do it at the blue points, on average we are paying lower prices for our stock compared to if we do it at the red points. Right, so in a bear market and when prices are falling, we want to do our dollar cost averaging at all these blue points here. And when the market is rising, we want to do our dollar cost averaging at these blue points here. Right, so that is how we do our dollar cost averaging strategically during a bear market or even when prices are rising. Right, so those are the two important things to take note when doing dollar cost averaging. And now that we know these two things, let's take a look at the charts and see some examples of how we can apply dollar cost averaging in the stock market during this bear market. Alright, so we are on my price chart right now. So the first stock that we'll take a look at is Alibaba. So if you haven't checked out the top 5 stocks that I'm watching right now and are doing dollar cost averaging into, make sure you check out the video over there, right? So in that video, I share with you the top 5 stocks that I'm currently looking at. These stocks, I believe, in my opinion, are fundamentally strong companies, right? So remember earlier in the video, I mentioned that first thing is we want to do dollar cost averaging when the company is fundamentally strong. And then the second thing is only do it at strategic points, right? So Alibaba, when I did my own analysis, I've determined it to be a fundamentally strong company, right? So the next thing we want to take a look at when we do dollar cost averaging is to do it at strategic points, right? So let me take a look at the price chart, right? So on this price chart, there are certain things that I look out for when I do my dollar cost averaging strategically, right? So one of the things I take a look for is support and resistance level, right? So again, if you are not sure of what support and resistance level is, make sure you check out my video over here where I explain what support and resistance level is, right? So I like to do my dollar cost averaging at certain support levels, right? So if you see this price chart here, is the price chart for Alibaba, right? So where I did my dollar cost averaging was at around this price, right? So at this price, can you see that there's a support level here? So the support level is the 38.2% Fibonacci level. And on top of that Fibonacci level, there was a support level here or O resistance, right? So in the video on support and resistance, I share with you how a resistance level, once prices break past that resistance level tends to become a new support level, right? So at this level or at this price area, there are two support levels. So the first one is the support level and the second one was the 38.2% Fibonacci level, right? So with that two support level in place, and can you see there's also the 150 moving average here? So we have three support levels at this point, right? So when I have three support levels at this point, it indicates to me that prices are likely to rise over time, right? So I entered my dollar cost averaging a certain portion of my investment amount into here. But as you can see, instead of rising, prices fall instead, right? So this also brings up a very good point that I like to explain to you guys, right? So like I mentioned, there are three indicators that show me that prices are likely to rise. So this just gives me a higher probability of success in the stock market. But this does not mean that I'm right all the time. So as you can see on the pie chart, I was proven wrong this time. But it's okay for me because remember what I shared with you guys. When we invest in fundamentally strong companies, if prices continue to fall, it is a good thing for us because it is on a discount, right? So similar to the iPhone 11, even though if you have bought the original iPhone 11 at $200 and now the iPhone 11 costs at $100, will you still buy the iPhone? You would, right? Because you know that you could sell it at a way higher price than $100. So similar, even though I bought it at this price, prices continue to fall, right? It's good news for me as an investor because I get to buy even more of this stock at a greater discount. So right now, I'm looking into buying more of Alibaba. So just to share with you guys, I'm going to do even more dollar cost averaging into Alibaba because I believe Alibaba is a really fundamentally strong company, right? So there was at this point that I was looking to buy Alibaba, but prices rose immediately, like too far up from here, right? So I didn't enter my position. So what I'm doing right now is I'm waiting for it to either fall back to this level, so at a 38.2 level again, or to fall below here and at this trend line. So I'm looking to add even more positions when the prices fall to this level or this level, right? So if prices continue to rise, it's all right. So then I don't get to buy it at such a cheap discount anymore. But what I will do is if it rises up above this 61.8 level, I'm going to add some around here also. So that is how I invest and do my dollar cost averaging in fundamentally strong companies, right? So another company that I share with you in the top 5 stocks is Microsoft, right? So Microsoft, I shared with you guys in the previous video, so how I did my dollar cost averaging. And currently, I'm going to buy even more shares of Microsoft. So let me explain my thought process behind my dollar cost averaging, right? So in the previous video I shared with you guys, I did my dollar cost averaging at this point. So what I did at this point was multiple of reasons, right? So can you see that there's a trend line there? So it's also a support level. And at this point, there's also another support level. So there's two support levels at a point. So when there's two support level at a point, it indicates to me prices are likely to rise in the future, and prices did rise in the future. So on this occasion, I was right. But for the Alibaba situation, I was wrong. But it doesn't matter, right? Because we know that if I'm wrong, prices continue to fall for Alibaba. It just means that I'm able to get Alibaba at a greater discount. But in this case, for Microsoft, I'm proven right. So if I'm proven right, then it shows that prices rise after that. So I make some money from investing at this point here, right? So the next point that I'm looking at to add into my position in Microsoft is at around this point level here, right? So again, let me explain why I want to add my positions here. So again, remember I shared with you how prices rise. When prices rise, how we do our dollar cost averaging. We want to do it at the dip. So at the dip is, for example, here is one dip. So can you see that prices rose here and then it dip a bit here and then now it rise. So what I'm trying to interpret from the market is that it's going to fall back here, and if it does fall back here, then I'm going to buy here at the dip again, right? So that is where I'm going to add even more position of Microsoft. So remember the two things that we want to look out for when we are doing our dollar cost averaging is the first thing, we want to make sure that the companies that we are doing dollar cost averaging are fundamentally strong. So that's the first point. The second point when we are doing dollar cost averaging is we want to do it at strategic points, right? So strategic points may be at support levels, so on and so forth, right? Let me know whether this video is helpful and let me know which companies you are looking to dollar cost average into. Be sure to hit the subscribe button and bell icon so that you don't miss out a new video every single week. Smash that like button if you enjoyed this video and check out the top 5 stocks that I'm placing on my watch list and are dollar cost averaging into on the next page. to your financial success.